Ladies and gentlemen, good day and welcome to the H1FY26 earnings conference call for OSELDEVICE Limited, hosted by 28 Consulting. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. From management today, we have in the call Mr. Ravi Mishra, Promoter, Mr. Mukesh Sinha, Whole-Time Director, and Ms. Diksha Singla, Company Secretary. I now hand the conference over to Ms. Palak Agarwal from 28 Consulting for opening remarks. Thank you, and over to you.
Thank you, Yashashvi. Good morning, everyone. Thank you so much for joining us today for the conference call. We are really pleased to share our financial performance for H1 FY26 across all verticals. The company's tiered product portfolio in the hearing aid segment reflects its commitment to serve a diverse customer base and offer solutions across various price points and technologies to achieve both volume growth and value realization. Collaborations with reputed international partners such as Fry Electronics Inc. continue to strengthen company's technological capability and market credibility. In India, the company is developing a clinical network supported by trained audiologists to reinforce its focus on quality and customer trust. The company also initiated pilot export orders and plan to gradually expand into private market channels like retail, wholesale, and digital platforms. Coming to LED display segment, the company is building international partnerships with established OEMs to enhance its global reach, while domestic collaborations with national banks are supporting wider scale installations. The client engagement strategy is focused on enabling enterprise-wide deployments and fostering long-term relationships. Coming to mobile division, it continues to show steady progress, evolving from an initial pilot order of 1 lakh units to a follow-up orders exceeding 3 lakh units, supported by encouraging market feedback. The company anticipates continued momentum in this segment, exceeding orders above 5 lakh unit, guided by its emphasis on operational efficiency and responsiveness to the market needs. Together, these initiatives reflect its steady pursuit of sustainable growth, innovation, and long-term value creation for all the stakeholders. Thank you. Over to you, Yashashvi.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take a first question from the line of Vivek Patel from Ficom Family Office. Please go ahead.
Very good morning, everyone. Am I audible?
Yes, please go ahead.
Thank you. So firstly, just a bookkeeping question for this half year FY26. What would be the revenue? Very good morning. Is the voice clear from my end now?
Sure, Vivek, please go ahead. Good morning.
Yes. Thanks a lot for the opportunity. Very good morning. First question, wanted to understand about this half yearly. What is the segmental revenue breakup for listening devices, LED, and mobile phones? And what were the margins for these segments for this half of the year? And also, I noticed there is a very sharp increase in other expenses and interest costs for this half. If you could throw some light on these two things.
So we have basically segmental data for three things. One is hearing aids, LED display, and then mobile phones. So in current terms, we have around 35% in hearing aids and 48% in LEDs, and then a small bit in our mobile phones, around 15% in mobile phones. That is the numbers that we have done so far.
And what about the margins for these segments?
Margins in terms of gross, we don't have the actual numbers here, but in terms of gross, normally when it comes to hearing aids, our gross would be around 30 to 35, and then for hearing aids we are 30 to 35%. For LED display it would be around 15-20, and then phones is also around 15-20.
And what about this cost increase for this half year, other expenses and interest costs? And also, was this a one-off, and do you expect this same level to continue?
No, interest costs will certainly go down, but recently we have some working capital requirements and all those things, so we have using bank limits and all. So we have interest arrangements in that basically, because we have orders for Philips and all those things which we still need to pay in advance and all. So those take some interest cost in that. But this will not continue with that. Once we have regular business and rotation of basically rotation cycle starts for all these new businesses that we have added up, things will be better.
Okay. And second question is about hearing aids. So of the 4 lakh units, if I'm not wrong, is that annual capacity for hearing aids? What was the number of units in hearing aids sold in, say, FY24, FY25, and in this half, if you could give that number? And if I'm not wrong, we have large orders from the government under schemes. Right? What was that portion of units being sold to the government as well?
So, do we have this data ready now? I think we'll have to get back to you with the number of units sold for hearing aids with the comparative data for last year and this year.
No worries. And in the opening remarks, it was mentioned that we are making inroads in retail or D2C hearing aid segment. What is the progress like as of now, and what are the strategies that we are employing to increase that share of our revenue of private retail hearing aids?
So in those lines, we are already in touch with a lot of clinics and audiologists. So to start with our retail product sales, and we have got some good advancements in that, and very soon we will have some good announcements on that in those lines.
Are we penetrating just in terms of direct to retail, or are we going via the audiologists?
We will have both the channel actually. So our audiologist channel will also be there, and there will be also online channel that will be through for the OTC products, because there are certain products which needs audiologist interventions, which is in terms of fitting programs and all those things. So that will go through audiologist only. But the OTC channel, which is over-the-counter product, which will go through online channel. So we'll be attending to both the channels.
Okay. So do we have in our mind about what revenue share that we would like to target over the next 2-3 years of this the retail or non-bulk sort of segment for hearing aids? Any rough estimates that we can have?
We do have some estimation, but it all depends on how the market feedback comes on, because we have already developed, the products are ready and they are tested, and some pilot testing along with these clinics and audiologists are already in place. So we have got reasonable feedback from there, but we still have to see how the consumer, the end consumer, because final customer is that only. So we still have to see how the end consumer reacts to the product, or what is their feedback in terms of users, prices and all. So once we have those basic understanding, we'll be able to estimate the volume that we will be able to do.
Understood. And so lastly, I just wanted to understand our capital allocation strategy. Right from the time that we have raised funds from IPO and further preference issues, the company has invested a total of, I believe, roughly about 60 crores in working capital, excluding the 41 crore that we have invested in mutual fund this half. During the same time, our short-term debt has increased from 48 crore in FY25 to almost double in 98 crore in this half. actually remain on the book? 73 crore is already still on the books. Just wanted to get some dynamics on why are we, raising short-term debt while we have already invested a lot in working capital, plus we already have cash on book. So just if you could explain capital allocation strategy, why we raised debt, and, expand on that.
So we basically recently got additional CC limits because we are expecting higher volume of business, and so we need to be prepared for that. And that's why we have added up the working capital limit with the bank also, and we are utilizing that. We got these mutual funds done when we got this, the preferential money. So then whenever the money came in, we had additional funds available to us for short term, so we put it into mutual fund for short term, which will be basically be encashed again. So these higher, that imbalance that you see, we have cash in hand and then we have debt also, so that will be nullified.
Okay. And is there any capex that we have planned for the mobile phone division's expansion? Because you mentioned 5 lakh order, so there might be some capex that we are expecting over the next year or two.
Not exactly right now. We will have some capex requirement once we have stable and regular orders coming in. So right now it's just a startup business and we are trying to grow it. So once we scale up to a level wherein there is some stable orders every month, so we know if there's 3 lakh units or 5 lakh units every month is coming up, then we will have our own setup to do manufacturing in-house. Currently we are using the third-party manufacturing base to produce the products.
Okay. Thanks a lot for answering the questions, sir. I'll get back in with you. Thank you.
Thank you.
Thank you. We'll take our next question from the line of Abhishek Bansal, a retail investor. Please go ahead.
Hello. Hi.
Yes,
Hi, sir.
Abhishek.
Very good morning and congratulations on a great set of numbers. Sir, I wanted to understand that for your mobile phone division, you guys have hired a distributor, Zenotech. So wanted to understand their capabilities and the reach they bring to us, and they also have an existing business of smartphones. So will that compete with what we are trying to do with Philips, and how do we plan to leverage on their network and scale up others? So that'll be my question.
So they were already into the phone business basically. So now we are leveraging their capability on that. So, but now they are only focusing and exclusively focusing on Philips sales across the country. For now, within last 3-4 months of our effort, we have reached out to 120 plus distributors and around 600 plus retail outlets basically across the country. Along with 600, we have already appointed 650 plus locations for services. So those things are there. And while it is distributor driven, we are continuously monitoring the distributor process and sales, and even the team members and everything is monitored, and the continuous monitoring is there from our side also.
Okay.
So there is no distraction in terms of their own mobile phone being in the market.
And so what is the current, the sub-distributors they have appointed, how many do they have under their umbrella? And right now, this is the uptake we have, like you mentioned that we are now targeting a 3 lakh order for more phones. How has been the average distributor uptake till now and the repeat ratio from whatever we have done till now?
Fine. So basically we initiated with the pilot numbers for 1 lakh unit, which we got good feedback, and as you are aware, we are starting with the feature phone market only. So product feedback, quality feedback from even the end customer is very good for this product, and compared to the other product available in the market, we have been treated as a better one. That's the feedback from the people right now. So as I mentioned, in terms of number of distributors, we have already appointed 120 distributors under Philips brand, and they are already working continuously with us, and they are regular and repeat orders through them also. So we are not targeting 3 lakh units order. It's already there with us. Now we are targeting the next 5 lakh units order by December.
Okay, sir. Thank you so much.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We'll take our next question from the line of Mahavir, an individual investor. Please go ahead.
Sir, can you just explain us what is the utilization of the funds that were raised?
Oh,
So the preferential issue that we raised, how are we utilizing those funds? First was by the promoter, and the second one was the second round that happened. And the second question is, in terms of medical equipment, are we planning to venture into new products, or are we only going to stick to hearing aids?
Okay. So let me take the first question. In terms of working capital requirement, in terms of the funds raised, it has gone to working capital requirement only. And apart from preferential, the other fund that was raised is 3.24 crores only, because it's these are warrants basically. And so only 3.84 crore was raised in that, because the rest of the money would come later on a stage. So they are all utilized currently in the working capital.
Okay, got it. And what about, yeah?
Yeah, second question, what you had. If you can repeat that, please.
Yeah. So in terms of medical devices, are we planning to venture into other products, or are we only going to stick in with hearing aids?
Right. So we have mentioned earlier also, we are basically a technology company, and we have got in-house R&D team which continuously keeps working on new product lines. So yes, once we establish and stabilize our hearing aid product line, we are certain to get into other products as well, which will be more into medical, and to be precise, more into assistive medical devices.
Okay, got it. So what about the JNPT port? Any update on that?
Yeah, we have got all the approvals in place for the JNPT thing. There were some additional requirements which we are expecting to get the approval from the competent authority within this month itself. That's what we have been committed. And then we are good to go with the setup there.
Okay, so just wanted to know a little more. So JNPT will be basically used for LED screen export, correct?
Yeah. So JNPT, we have around 5 acres of land there, and we are targeting to have warehousing as well as manufacturing setup there. And both will be utilized for domestic and international business, and especially the re-export business that may be possible with Middle East and other things. We were also excited about using the US thing, but current tariff is actually blocking it up. But once the tariff settles down, even the US North American market will start for us.
Okay, got it. Thank you, sir.
Thank you.
thank you. Take our next question from the line of Abhishek Bansal, a retail investor. Please go ahead.
Hi, sir. Thank you for the opportunity again. Sir, now my question is more towards the hearing aid business. Like up till now, we were focused more towards the government business and the government tenders, and now we are venturing out into the retail segment. I was reading through a few reports that globally the hearing aid business is centered with around 3-4 major players, one being the Starkey, and they have a monopoly over that business. Now, as we venture into the retail side of the business, how do we plan to tackle that monopoly, and what exact differentiation or price or product differentiation that we bring to the table that will allow us to penetrate deeper into that market? So would appreciate your views on that as well.
Perfect. So basically, yes, there is, I would not say monopoly, but it is more managed by these big fives of the hearing aid industries. Basically, those big five, including Starkey is one of them. There's Starkey, Phonak, Siemens, these guys are there in that. So this is currently, especially when we talk about Indian market is currently driven by a recommendation from the audiologist or ENT specialist, basically. So that's the thing. Anybody who is having any ear problem would first approach the ENT, and then ENT will send it to an audiologist who will do the test and recommend some hearing aids or solutions. So the whole market currently works is on their recommendation. What they recommend, which brand they recommend, and which they do based on the influence they have from the brand. In terms of the margins they are making, the audiologist would make, the money they are making, the support they are getting from the brand and all. So in this case, what is happening is the price range for these products, because everybody is interested in selling the higher range of product and make more margins, which is obvious for everyone. So everybody is trying to sell out a higher range of product, which at times most of the consumers at a lower end are not able to afford. So there is a lot of underprivileged people who are not able to afford to buy that hearing aid at that cost. So with us, basically, we are trying to target with our product line. We are trying to keep our margins very much in control, but still which will be good margin compared to what we are doing now. in the B2B business. And we will try to open up a new segment of customers whom they are not able to cater to right now. So the same setup would be able to bring in more business for us also, while not really competing with those existing brands.
Understood. And so in terms of pricing, how much, value proposition we plan to offer compared to the next best, player that we have, like, in terms of our pricing, how much cheaper we are planning to do it while keeping our margins and, product quality intact? What is the range that we are looking upon at? Some broader sense on that.
Hearing aid is a very niche product actually, and the margins with everybody, even whoever is selling currently, are being sold at a very high margins basically. From production to sales price, it's a huge difference. So from 15,000-20,000 rupees per unit to even 4 lakh units per unit, products are available. So we can basically still be economical in terms of 30-40% cheaper than what they are, and then still be better than what we are doing currently. So we can still increase our margins to 100% maybe, but still be cheaper than the other product by 30-40%.
Understood. Thank you. And just one last question on the hearing aid itself. Like, I saw that we partnered with EarCart as the distributor, and they are building their own distribution channel and partnering up with the audiologists and setting up centers, and and they are doing a mix of strategy, like selling their own internal hearing aids, which they are manufacturing, as well as partnering with third parties. So how has been the distribution partnership with them been channeling out? What are the inroads that we have made through them? And they venturing out into their own hearing aids, is it a concern for us, or can it be potentially dampen our business that we are expecting in the future?
That's not exactly a concern actually, because we have got strong partnership with them as well, and they are building up their network, which is going ahead with good connections basically, and their network is also growing. And with the grown-up network, as I mentioned, everybody needs a different level of products. So when we get into the same network, we are not competing with the existing supply chain. We are actually adding up to additional market potential basically that is not being catered to right now. So with our products offering, we don't see a challenge with that. And in fact, they will have one more product to actually fill up the gap what they have right now.
Understood, sir. Thank you so much.
Thank you. Before we take the next question, we'd like to remind participants to ask a question, please press star and 1 on your phone. Next question is from the line of Suman Kumar, an individual investor. Please go ahead.
Hi, sir. Good afternoon. Am I audible to you?
Yes, please go ahead.
Okay. I just heard from you saying that you already have a definite order of 3 lakh units and you are looking to get another 5 lakh unit orders by December. Is this for the mobile phone?
Yeah, these are for the mobile phones, yeah.
Okay, sir. And I'm assuming that we have the sales and distribution and marketing right for India, right?
Right.
So when you are saying that you are getting these orders, who are these orders coming from? So are they coming from the distributors or the dealers that we have appointed? And hence, are they really about filling the pipeline for now? Do you have any sense on offtake and how it is moving so far that you may have placed in the past?
Right. So based on the activation data which we are tracking, which is not actually accurate, but still it gives us a sense of what is being happening. So activation data is when a user buys the final phone from the retail shop and then they put in their SIM card and then they start to use it. So based on that activation data, we have reached around 800 units per day of activation is currently there for that. So which gives us a basic sense, a good level of activation is happening. So and the mobile phones are reaching to the end customer's hand. So that tracking is already there with us. And when we say 600 in numbers, it would be basically, we can say we are only getting 20-25% of the activation data with us because all the data would not come to us. So we are assuming it would be around 1,800 to 2,000 units per day is being activated now. So whatever
2,000 units per day?
Kind of, yes.
Okay, 2,000 means about 60,000 units per month and probably 7 lakh units per year. Is that how it is? I mean,
Right.
am I reading it right?
Correct. And this will increase further.
And what is the kind of realization that we expect per phone, sir?
So currently, our realization of per phone is around 850 rupees.
Okay. So these are basic phones, right? Not.
These are feature phones, yeah.
These are the feature phones. Okay. So, and you said the gross margin is 15 to 20%, or it is the EBITDA margin which is 15?
EBITDA margin.
Okay. Great. Thank you so much. Yeah. Appreciate your response.
Thank you. We'll take our next question from the line of Mahavir, an individual investor. Please go ahead.
Thanks again. Sir, I have a question regarding our collaboration with Philips. Are we going to manufacture or supply other products of Philips in near future?
Yeah, we have started with feature phone, while we have the complete range of mobile phones with us. So we will soon be launching smartphones as well. And then tablets and other products are there in pipeline. So basically we already have all that with us, but we are going slow because we have to establish one product and then we add another, and we have to understand the market. The dealer network is already there, then we will add other things into the same thing. So initially we have to create the inroads and the network, and once we have that in place, bringing in other product will be much easier, and we will already know what to invest, what not to invest in.
Okay. And will we be manufacturing all these products in near future, like the smartphones and LED screens and laptops and other electronic products?
Whatever product we go in, we will be ensuring that we are the manufacturers for that. We will be manufacturing the product here in local. We will not be just doing a trading business. We don't want to get into that.
Okay. So when we start manufacturing, I suppose our margins will reduce in this segment, or how will it be?
Exactly not, because right now also we are manufacturing it, although we are using a third party, but we are still manufacturing it. So it's the same position. The only thing is the manufacturing will come in-house later on.
Okay. Okay. Got it. Got it. Thank you.
Thank you. Next question is from the line of Nalini Kant from Finvis Capital. Please go ahead.
Hello, sir.
Your voice is not clear. Use your handset mode, please.
Am I audible now?
Yes, please go ahead.
Congratulations on a very good set of numbers. So in the hearing aid segment, we are flat on high.
I'm sorry, your voice is, it is getting muffled.
Let me try again. Is it better?
Little better.
Okay. So my question was, in the hearing aid segment, on a Y-on-Y basis, we were almost flat. So if you could just give us a reason, like, why we were not able to grow, what were the major reasons for a flat growth in the hearing aid segment?
You're not very clear about So are you asking us the growth in hearing aid segment is flat compared to the last year's time?
Yes. Yes. Yes.
There is certainly a growth in hearing aids also. So 35% is what is the growth? Yeah. So this was because see, in hearing aid business, we are into government, mainly through government tenders and all. So what happens is at times the government tenders have deviations in terms of delivery and other things. So we still have good orders in hand. So going forward in next 6 months, these numbers will still have good increment on that line.
All right, sir. And so in the mobile phone segment, what kind of a timeline we are looking to start our manufacturing? When can we start the manufacturing of the feature phones, and what would be the timeline for smartphones? And if you could give a sense of what is the timeline to launch the smartphone business as well?
We already have smartphones in pipeline actually. So probably by December, sometime towards end of December or maybe mid of December, we'll have smartphones coming into the market for trial supplies. And as I mentioned earlier, we would get into production once we have stable, and once we are confident about the stable business coming every month. So then only we'll be entering into that. Probably we are expecting, we are very positive about it. So we are expecting by March we should be having some clear picture on the monthly sales volume that will be regular for us, and then we will get into production ourselves.
One last question. In the smartphone segment, what kind of the price range we are looking in which we would be bringing our products?
We are targeting a range which there will be 2-3 range basically. One will be under 10, and then other 2-3 products line will be under 20K per unit.
All right, sir. Thank you. That's all from my end.
Thank you. Next question is from the line of Akshay, an individual investor. Please go ahead.
Hello. Am I audible?
Yes.
Yeah. Hi. My question is, so in terms of order book and order pipeline, can you throw some light?
Which product? So I can give you an example.
Any of the segments.
Right. So we currently have around 70 to 80 in hand basically orders that is in pipeline to be closed before or to be delivered before March 26.
Okay. And anything in order pipeline, any new tie-ups which are we looking for, or even with the existing ones?
There are things in pipeline basically in terms of some alignments with the international businesses. And what we have missed telling you here is we have already started in the first financial or half yearly also. We have already started doing some OEM business, and a good portion of LED sales is coming from the OEM business also, which is basically we are producing for some good brands. So those tie-ups are also already, more tie-ups are in pipeline, so more international MNC brands will be added into our customer base, and we will be producing it for them, especially the LED part, LED displays.
Okay. And from when do we expect this to ramp up, right? This OEM business on? By which quarter?
As I mentioned, I'm avoiding to take names here basically for the brands, but
no, just the ramp up where we feel will be good in terms of a particular percentage on revenue or something of that sort.
Correct. So as I remember, we have already done in the first half yearly, we have already done around 20 crores of business with a US display brand basically. We have done that for their domestic supply, and also we have some additional orders to be supplied now, which will be export orders. So those things are already in place. So, and for other 3 brands, we have audit and everything is already done. So we will have those things those orders also adding up into our business.
Okay. And my next question is, with respect to like whatever fundraise we have done till now and plus the short-term debt we've taken predominantly into working capital. So are we good in terms of fundraise for now, into equity debt for working capital, let's say for next 1.5 years, and even if there's anything on CapEx as well, fundraise for any CapEx?
Right. So in terms of working capital for the current requirement, we are pretty good. But as I said, if we are thinking positive and which we are sure to achieve, we will have additional working capital requirements, which we have good banking support also. But working capital requirement will continue to grow because we are expecting the business to grow as well.
Okay. So just to quantify the longer term, or let's say in a year, 2 years term, what do you think would be your receivable cycle in terms of number of days once things are stable?
Receivable cycle, we are expecting it should, like in general, our business does not go beyond 90 days. So that is what we are targeting here. Our receivable cycle will be within 90 days of the business.
Okay. I guess currently it is around that, right? Okay. Fine. Okay. Thank you so much, and thank you for the great business. Thank you.
Thank you. Next question is from the line of CA Garvit Goel from Invest Analytics Advisory LLP. Please go ahead.
Hi, am I audible?
Yes.
Sir, I joined the call a bit. Hello, am I audible?
Yes, we can hear you. If you can use your handset more, Garvit.
Yes. Hi, good afternoon. I'm saying I joined the call a bit late, so I just want to understand what is the growth trajectory that we are targeting, particularly for FY26 and next 2 to 3 years in the terms of top line and bottom line? And also, what are the drivers that are going to drive that trajectory?
See, in terms of top line, the growth drivers would be obviously the Philips mobile phone sales, which we are expecting. Even the smartphones will add a good volume to the total revenue. So that will be there. And after that, of course, it will be LED because that has got a huge potential in the market, and we are well positioned to capture that. Also with the OEM orders coming in, and we are also expecting export sales for that. So LED will be driving the second thing. And hearing aid will have steady growth of 20-25%, I'm guessing that. And with retail coming in, maybe the top line would not increase, but bottom line will get better with the hearing aid retail sales coming up.
And this 20-25% growth, are you saying is it the overall growth or the segmental?
I'm talking about the overall growth.
Overall growth, we are targeting 20-25%. And so one more question, like our existing business is more towards the B2B segment, right? And in the Philips, we are entirely going into the B2C model. So I just want to understand, like, why this shift is happening and why are we confident that being a B2B company, we will be able to get that kind of success in such a shorter period of time in B2C model. I just wanted to understand on that, sir.
Right. So we understand that it's a different market altogether, but when it comes to our business, we are still electronic manufacturing that we are doing for whether it is a mobile phone or hearing aid or LED, it's all is electronic manufacturing for us. So from the backside of it, we are still in the same business. And in terms of sales, we are still talking to dealer distributor network, which again is B2B for us. And then further is being sold to the next customer. And yes, we need to get into advertisement, promotion, and brand promotion and all those things, which we will eventually get into. But right now, that's the very reason why we started with the feature phone, which does not require a lot of promotion and a lot of sales and marketing activities. So with this, we have easy penetration into the market because Philips is a well-known brand and it has got a very good brand recall. We don't have to put in much effort into letting people know that Philips is there. It's a brand. So that
Philips as a phone is not a market, isn't it? Like in the mobile space category, which is already very much competitive. So there is no space for the Philips in India, right? So don't you think like it is not going to be that easy? Like Philips as a different category, I can understand there is a brand, but Philips as a mobile device, how we are pretty sure this will be able to, like in a shorter period of time, people will be adopting this thing.
Correct. So in terms of mobile phone, Philips does have some presence in Europe market. It is there. And right now, as we have already sold 1 lakh unit and we already have 3 lakh units in pipeline. In fact, more than 1 lakh units we have sold already. So we have seen the good acceptance for Philips brand because these feature phones are more onto the price and tier 2, tier 3 cities, wherein economically weak people would be basically buying these. So we have got good traction from there. And the feedback from dealers and the retailers and distributors, we have got very good and positive feedback. So I don't see that difficulty. And when it comes to feature phone market, which also is around 9,500 to 10,000 crores, except for Nokia, there is no international brand available in that segment. So people get Philips as a brand, at least in that. So that also gives us a good acceptance in that. So it will not be right to say that Philips don't have a space in phone market or especially the feature phone market. They can actually be the leader in that. At least in the feature phone market, they can be leader. When it comes to smartphone, yes, it is being led by Samsung and Apple actually. So apart from Samsung, Apple, you only have most of the Chinese brands like Xiaomi, Mi, Vivo, Oppo, and all those things in that place. So there is still a huge gap between Apple, Samsung, and the other brands which are not MNC brands basically. So Philips can still be promoted and can squeeze in even for a smaller portion. So smartphone market is almost 4 lakh crore market annual. So even if 1% or 0.5%, we are talking about very big numbers of that market segment. And we are a very small company.
You mentioned the 1 lakh units we have sold. What is the price range for this model?
So the cheapest model, so we have launched 4 models so far in that. So the lowest price model is the retail price is around $1,000, $999, and our realization is around 850 rupees per phone. And the top end model
how much is our realization, sir?
Around 850.
850. Okay. And how much? Okay. 150 is the royalty that we are paying to.
No. I'm saying the retail price, the customer buys at 999. The dealers or retailer would sell that. The rest of the margin is for the network.
Okay. And how much royalty are we paying on this sale price?
We do not pay any royalty as such. That's not the agreement that we have with them. We are buying the BOM from them, basically. So
how Philips is going to earn via this model, sir?
Right. So the BOM is coming from Philips, so they may be making profitability on that. BOM means the bill of material, which is required for producing the phones.
Okay. I think that is for my side, all the rest for future.
Thank you. We'll take our next question from the line of Vivek Patel from FECOM Family Office. Please go ahead.
Thanks a lot for the follow-up question. Just wanted to get some insight on the LED side of the business. Who are our key competitors, both domestically and internationally, firstly? And secondly, what is the competitive intensity of this space? Is it concentrated? Are there too many players? Is it organized, unorganized? If you could throw some light on these two aspects, your competitors and the intensity of the space.
Great. So LED is still in the initial stage of its business in India, actually. Internationally, it has done well, especially in the US and all. So to give you a basic idea, if we talk about Times Square or Las Vegas, you would see the whole city is filled up with LED displays. Even if you go to China, Shenzhen and all, even 40-story, 50-story buildings are, the whole wall is LED display. But in India, it is very, very small. But India is also a growing country, and we are expecting India to grow with that segment, and a lot of requirement on the LED side would come in. All the digital hoardings that you see, all the hoardings or advertisement hoardings that you see in Mumbai or any other places, need to get converted into digital for obvious reasons, because digital is more dynamic and people have to have that acceptance. Also, with government curbing onto the pollution, the vinyl prints and all those things will get into that. So there is a huge demand and potential for LEDs in the country. And yes, there is competition, but the thing is, currently it is not an organized sector. I would still consider this as a very unorganized sector. There is a lot of players are there, and a lot of different kind of products are available in the market. But at the same time, LG and Samsung are also into the same business. They are also doing these sales. And then there are other domestic players who are into this market. So yes, competition is there. But when it comes to big brands like LG, Samsung, we have a huge price advantage. And for a similar quality of product range, basically. And there are a lot of Chinese importers that are in competition, but we have got leverage in terms of our recognition in the market, our brand establishment within the industrial segment. So we have got good recognition because our client base, like we have worked with all industrial vertical clients, and top names are there in that client list. So if you say retail sectors, so we are working with Adidas, we are working with Skechers, UCB and all. If we talk about broadcasting, Doordarshan, India TV, they are already our customers. In terms of in entertainment, PVR is our customer. So all the good names are there. So in government sector, research and development, ISRO and DRDO is our customer. ONGC, HPCL, we have worked with them. So all kind of top names in the industrial verticals, all different verticals, top names we have already worked with. So we are coming up with those credentials. So we obviously have a benefit compared to what other competition brings in, basically. But yes, in a lower segment where it's mostly price driven, we may have some challenge with the Chinese importers, but otherwise in the organized sector wherein people are looking for established players and who can sustain, because these LEDs would require their life cycle is 8 to 10 years. So any good buyer or organized sector buyer would need to see that life cycle of the product also. So that's when people don't go in for the Chinese product or Chinese importers, then we have advantage in that.
Understood. And you had mentioned just now about the price advantage that we have versus Samsung and LG. If you could, throw some light on where this advantage comes from. Is it from the lower labor cost? lower raw material costs, or is it something that we do that's more technically better than Samsung and LG?
Okay. So of course, all the things basically comes into that when it comes to lower, because we are producing ourselves, so its production cost is certainly lower, and product, what you call the raw material cost is also lower for us. And then we have less management cost, which other brands have to add basically, because they have a lot of expenses into selling the same product, so their marketing sales cost is much higher than what we have. And of course, they want to keep more margins compared to what we have, because they can actually claim that premium for their brand names, which we currently cannot compared to them. So those things basically brings in the price difference.
Understood. And what is the progress on, I think there was a large order of Kotak that we were doing. Have you started doing delivery, or is that finished? Just some sense on that.
Yes, we have already done almost 100 plus branches for them, and we are continuing to do that. So in Mumbai, Delhi, all across the country, we are doing that.
Okay, understood. Thanks a lot for your answer. All the very best. Thank you.
Thank you. We'll take a next question from the line of Suman Kumar, an individual investor. Please go ahead.
Hi, sir. So when you are talking about the handset business, right, you are saying today it is around 2,000 activations that are happening per day. What is the true potential? So when you would have gotten into business, there would have been some scenario planning that you would have done. What is your estimate of where the business is going to be from, let's say, today to a year down the line and maybe years down the line?
Right.
And then I'll ask.
Correct. So I have mentioned that the market size for, there are two segments in mobile phones basically. One is feature phone, one is smartphone. So I'll tell you about this feature phone market first. So feature phone is around 9,000, 10,000 crores market currently, which accounts to a volume of around 50, like 5 lakh units a month. So that is the kind of sales is happening for feature phone, which is there. And with Philips brand and with the initial inputs and feedback that we have from the market, we can capture a good percentage of this basically, or we can even be the leading name in this market in coming 2 to 3 years.
Okay. And
smartphones
I'm sure
Yeah,
I'm sure you would know about the complexity of building a brand there. Why do you think, first, when you say a good percentage of market, what is the aspiration? And how do you think you have a right to win in the segment? What are the marketing strategies that you have in place that you hope and expect to achieve whatever that you are trying to achieve?
So when it comes to feature phone market, it is more price-driven market. So people just need a product which they can utilize and at a reasonable price. So in terms of pricing, even though we are having the good brand name with us, we are very, very competitive in terms of pricing. We are not very costly compared to other products available in the market. So that gives us a leverage of if anybody has to pay 50 rupees or 70 rupees extra compared to any other brand, which is any other name that is not very known. So people are happy to pay that money to Philips. So we have kept our prices very much in competition with what is available in the market. So that gives us a leverage. And since it's a price-driven market, we don't have to do much of the effort into marketing and sales, because when people are getting a reasonable price product and a Philips brand with it, it's an easy sale actually. So once the product is available across the country with all the dealer distributors and retailers, the sales would easily be coming up.
And which are the other significant players in this segment? And where all have you already expanded to? Are you focusing on a particular geography, or you are going all India right now?
So other brands that I would say basically one dominant brand is Nokia in that. So Nokia is there, which is selling around 15 lakh phones approximately a month. And then we have ITEL, which is leading. ITEL is another brand which is not an MNC brand, but it's there. So that is leading the thing. And other brands are domestic Indian brands, basically, which is having a small shares of the business. So that is there.
Good.
And I did not understand your second question again.
18 states right now we are active.
So as far as distribution is concerned, we are already reached around 18 states. all across the country, and we are targeting to reach all across the country, basically. So we will be available in all the cities and all the states. But right now, we have reached up to 120 distributors in 18 states.
Got it. Can I push in the last question? Can I ask one more question, please?
Yeah, please.
Yeah. So the final question is, the kind of expertise that is required as a manufacturer, which has been one of the core strengths that you have, is very different from being a retailer or ensuring sales and distribution of a brand, right? The further complexity in this business is that there is also some degree of service provider requirement role that is expected of it, because phones, there would be some complaints coming somewhere, and hence I'm assuming that even in feature phone market there will be some service component which is there, right? So when you are already trying to expand in the manufacturing segment, right? Do you have the confidence that you would be able to do justice with the capability required for ensuring marketing, sales and distribution? Would it not have been a much better idea to probably go with a ready-made retailer, somebody like Redington, and I'm assuming there will be more such players. What made you take a decision in going and doing this sales and distribution and service by yourself? Where did you get this capability, and how do you think you have the capability to do justice here? And there are other issues also, so working capital. Probably there would also be risk of the trade receivables not coming back to you. So, I mean, how do you plan to sort of navigate through all these complexities?
Right. So we are very much aware of all these concerns, basically, and we have already worked out on that. So when it comes, and that's the very reason why we started with feature phone and not with the smartphones. So all the concerns that you have put in are very much true when it comes to smartphone market, because smartphone market is a push sales. Consumer needs to know the phone. They need to be marketed well. They need to be aligned with, okay, there's a brand, there's a phone, there's a feature in the phone, and then they do the buying decision. But when it comes to feature phone, it's a different market altogether. It's a very mature market, and it's mostly price driven, as I mentioned. And the whole segment of dealer, distributor, retailer network is there in place. So when it comes to service, yes, it becomes a challenge. But when it comes to feature phone, there are already players who are providing service players. So we have already signed up with a third party to provide services, and they already have a network of 650 locations for services. So that is already in place, and we are not operationally involved in providing services. We provide them spares to these people, these third party, and then they take care of the rest of the things with them. And they obviously charge us for any service call that comes in. So far, with whatever sales have happened for Philips, we have got around 0.2% service issues, and that has been rectified by them. So our presence, we are already present. Before even we sold one single phone, our presence with the service was across 600 cities, 600 locations basically, 650 locations. So that service part is taken care of, and we don't need much of marketing and sales when it comes to feature phone. And once we have that feature phone penetration in the market, a basic level of marketing as Philips being a phone brand is already done, and then we will be building up the smartphone market on top of it. So that's the strategy we are currently working on. And by the time we come up with the smartphone thing, feature phone sales profits would also be supporting the expenses that would come in marketing and sales in that. And yes, we are a manufacturing company, so we should be focusing on manufacturing, and that's exactly what we are doing. And with that reason only, we have Genotel as our national distributor. So the rest of the things we are pushing up onto them. So they are.
And what is the kind of cash conversion cycle that you foresee in this business?
So when it comes to feature phone, we don't have much of the credit provided or passed on to the dealers or distributors. We get within 30 days we get all our money. But yes, it will be different when it comes to smartphone, because smartphone we will be dealing with all these big retailers, shopping chains. So then we will have some different credit cycle. But right now with feature phone, we are very much within control basically.
And you are also present on the e-commerce websites?
We will be entering into that. Right now, I think just one partner is doing some online sales. We will be going up in that once we have our dealer distributor network set. Then we will directly get into the online sales.
Thank you, sir. Thank you so much for all this.
Thank you. Ladies and gentlemen, we'll take that as the last question for today. I now hand the conference over to Mr. Ravi Mishra for closing comments. Over to you, sir.
Thank you. So I would just like to say we are doing our efforts to bring in the best business possible for us, and we are utilizing all our capability to add up more product partners and business tie-ups that would basically enhance our business and growth, that will support us in our growth. So we are expecting to have good results coming also in coming future, and let's hope for the best. I would not like to say any numbers and all, but we are expecting maybe we will be doing good, because the kind of efforts we are doing and the kind of tie-ups we are happening, we are expecting good outcomes.
Thank you, sir. On behalf of OSEL Devices Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you. Thank you.